How to avoid Elliott wave analysis mistakes. How to avoid Elliott wave analysis mistakes. We're going to start analyzing this talk. Fossil Incorporation, EPIC FOSL, Foxtrot Oscar Sierra Lima. And we want to share with traders how one can avoid Elliott wave analysis mistakes. All right. So we're going to use the reference point 2009. All right. And I'm going to start counting Elliott wave like an ordinary trader. All right. So very simple. You can see that from 2009, the stock market began a bullish trend. So Fossil Incorporation also start a trend. So we see this is, the first Elliott wave. Pay attention, my friend. The second wave. The third wave. Is it the third wave? We will see. The fourth wave. Is that the fourth wave? That is the question. Followed by the fifth wave. Is that the fifth wave? How to avoid Elliott wave analysis mistakes. Let's continue. All right. Do you agree with this wave count? And do you disagree with my wave count? How can I avoid Elliott wave analysis mistakes? Is there any Elliott wave principle violation? So the fourth wave did not overlap the first wave, all right? And the third wave is not the shortest motive wave. Looks to me good. All right. Is that a valid Elliott wave count? Okay, let's continue. Then we have a double retracement. A double retracement is bringing into mind the flat correction. Now the question is this a valid flat correction? This exercise is to show traders how to avoid Elliott wave analysis mistakes. So first wave, second wave, third wave, fourth wave, and the fifth wave. No violation of the Elliott wave principle. Now price rush down, went back up. This is what we call a double retracement. So after that, we will be thinking of the flat correction, that the price will come down in 5 waves. 1, 2, 3, 4, and now we are in the fifth one. Probably we'll continue to go down more up to this level here, around the $10. All right, this is my preliminary wave count. All right, how can we avoid Elliott wave count? Okay, mistake, Elliott wave analysis mistakes. First thing first, when one counts Elliott wave on a particular time frame, for instance, on a 2-hour time frame, on the hourly time frame, on a 30-minute time frame, on a daily chart, on the weekly chart, one should not stop only on that time frame. So the next step is to see the internal waves and go to another time frame. All right. So to avoid Elliott wave analysis mistakes, from this stage, I must now go into other time frame. Go to a lower time frame, go to a higher time frame, trying to see whether, my wave count is making sense or not. Is it an accurate Elliott wave count? Is it a useless Elliott wave count? But remember, the bottom line is not to lose. So probably somebody who is an Elliott wave guru counting wave like this may get away with it, though the wave analysis may be completely wrong, but he or she may get away with it because he or she did not violate the market pattern. All right, so what I'm going to do now, I'm going to go now to, you can see clearly, if I'm going to go now to the weekly chart, okay? Because now I'm on a monthly chart, I'm going to a lower time frame, okay, to see whether my wave count is making sense or not. All right, my friend. So we are now on a weekly chart. This exercise will allow me to see clearly whether my wave count is making sense or not, okay? All right, is it making sense? All right. So when we are calling here the third area wave, see the structure, try to examine the structure of my third wave. It looks to me my third area wave is like a wave that is formed. It looks to me that what I'm labeling third area wave here, the price structure is not helping us. It's like that third area wave, it formed of three waves. Can you see it? I'm drawing on my chart. So remember, don't get lost. So our third area wave, supposed to be the third area wave, is starting from here and is ending here. Remember, when we counted the waves on a monthly chart, there were no violation of the area wave principle. Okay? So now we see it. Okay, so you say, so now we can see that on a weekly chart that something strange is happening here. How can we avoid area wave analysis mistake? So our supposed to be the third area wave is now subdivided into three waves. Doesn't make any sense at all. Doesn't make any sense because an impulsive wave should not be subdivided into three waves. Doesn't make any sense at all that this is the third area wave. Something strange is happening. But look also, all right? How deep is, this is our fourth area wave. See how deep was our fourth area wave in comparison to the third area wave. Now let's use Fibonacci retracement level. So our supposed to be fourth wave went down to the 61.8% Fibonacci retracement level of the third area wave that has been extended. All right, maybe a fourth area wave that went beyond, okay, the 50% Fibonacci retracement level of the third area wave. What kind of bullish trend is that? All right. So something is not making sense to me. Another thing that is bothering me here, after counting the wave on a monthly chart, now it looks to me this session here, it looks to me more like a double retracement. Look at the internal wave. 1, 2, 3. Can you see? Okay, let's put a bit of color into it so you can see it here, this section here. Looking at the internal wave. Which color should I use? The orange now. All right. Now this exercise is to show traders how to avoid area wave analysis mistakes. So your first wave count is not sufficient. You need to validate your wave count. So now you see here 1, 2, 3 down. I'm on a weekly chart. But on a monthly chart, everything looks good. But remember what I said to you, the most important thing is not to lose. If you're not losing doing that, That's okay, though you have made some mistakes. Here it is, again, 1, 2, 3. So now this section that I'm calling a fourth wave and a fifth wave is looking to me like, okay, a double retracement. And my third Elliott wave, my supposed to be third Elliott wave on a monthly chart, is subdivided into 3 waves, which does not make any sense at all. Though on a monthly chart there were no Elliott wave principle violation, my wave count is putting me under pressure. So I need to revalue my wave count, because I want to have an accurate Elliott wave count. I want to count Elliott wave precisely, all right, in order to forecast the market. So I may know exactly where are we now, what's going on, so I may predict the next price move. It is not easy, especially if you are a new trader. All right, but with more experience, learning gradually, you will get there. How to avoid Elliott wave analysis mistakes. First, in fact, don't use one single time frame. Use different time frames. So from the monthly chart, now we are on a weekly chart. What are we looking for? We are looking at internal waves. Okay. So now let's see this supposed to be third Elliott wave. Now I'm going to look again. In order to avoid Elliott wave analysis mistakes, trader can also look on their left-hand side. What do I mean? Look into the past. What has happened before? The past can also, we can use the past to avoid the price action in the past, okay? To avoid, will help us to avoid Elliott wave analysis mistakes. My friend, look carefully. So looking on my left-hand side, talking about the past, so this is my reference point when we start counting the wave. That's what I call reference point. We can see that the price went down on this weekly chart like this, display lower lows and lower high. And then from there, the price start going up like this. Okay? What can you see? Keep your eyes wide open without blinking, my friend. This low here, pay attention to that low. Because I'm going to draw a line, horizontal line to that low there. And things will start getting a little bit clearer to me. You can see, I want to put it a bit lower. This one here, put the line a little bit below. You can see that as you see this low here, the price, the first, okay, let's clear this. I'm trying to zoom into it now, my friend. Let's zoom into that session so everybody can see. Is it clear now? I'm talking about this low here on the weekly chart on our left-hand side. Is it making sense? What can you see? Well, you can see something. Maybe you didn't see it properly, but you can see it. It's there. There is an inverted head and shoulder chart pattern. This pattern is the most powerful bullish chart pattern in my view, because it's alerting us that a bearish momentum is diminishing. And how do we know? TSTW 24 traders should know that a bearish momentum is diminishing when the price has displayed the first higher low. So here in this session, the price is forming lower lows, lower high, lower lows, lower high, telling us that the bearish momentum is intact. But look what's happened. After that, the price went up in straight line. Remember what I said to you? The only way to fool a trader is to make that trader trade something else, which is not the price. Or the only way to fool a trader is to divert that trader attention to something else that is not the price. So not the price now. So we were in a declining channel, price from a lower lows, lower high. Here it is. This can, so next thing, in order to avoid Elliott wave analysis mistake, all right, one must keep eyes on the price actions without blinking. This to make you laugh a bit, okay? So use different time frames, all right? Different time frames, all right? Okay? Very, very important. Don't use one single time frame. All right. Look on your left-hand side. All right. Very, very important, which means check the past, what has happened in the past. Third, eyes wide open on the price action. What is the price telling us? So now, with this information, because understand this thing, okay, I don't want the video to be too long, because as examine the past, I keep my eyes on the price. It looks to me that I have an inverted head and shoulder chart pattern. All right. I will now restart counting my Elliott wave. So this low here, this one here, all right, is the first higher low after the bearish trend. So here you see bearish price going down, going down, going down. This low here is the first higher low after the bearish progression. Following our guidelines, I would prefer to call this the first wave. So now I'm trying to correct my Elliott wave analysis mistakes. By the way, this video is for traders who want to learn to master the wave principle and use the Elliott wave theory like, market analyst. Because if you are a market analyst, okay, so you will be doing a lot of forecasts in the financial market, an investor will be paying attention to what you are saying. So suppose you count your wave like we did on the monthly chart, and you give investor wrong information. You say, it's the best time to buy this stock. And the investor buy and they lose money. Or you tell them something which is a violation of market patterns, and the investor get into trouble. Will they listen to you next time? They will not listen to you next time. So your reputation is in line, and you start having all kind of blah, blah, blah because you are a market analyst. So therefore, I will rectify my wave count. So my new first Elliott wave did not start from here as we did on the monthly chart, but from here. So I'm going to color my horizontal line into pink. Here it is. And my first Elliott wave is this one here. I will color my first Elliott wave into red. That's my new first Elliott wave after the correction. And this is my second wave. All right, let's color it also into pink, my second wave. So this is my first wave, second wave. Now here it is. So where is the third Elliott wave? Is it making sense now? Our third Elliott wave is now clear to me. Here is our third Elliott wave, followed by our tiny, you see how tiny is this fourth wave? It's now 61.8%. Fibonacci retracement level of the third wave, but it's only 38.2% Fibonacci retracement level of our third wave. And now we have an extended fifth wave. Well. Is it making sense to you now? So instead of the first wave starting here, it's in fact from the pink line here. First wave, second wave. Is there any Elliott wave violation? No. The second wave did not cancel the first wave. We look in our left-hand side, everything was okay. Price was in a bearish channel. The first higher low is this one here. We'll start counting following our guideline. This is the correct way. You'll be amazed. Even those who call themselves Elliott wave gurus, Elliott wave specialists, believe me, may have come wave from here, first wave from here. But we don't want to get into argument. So what I say to traders, they say, Joe, your wave count is wrong. I say to them, this is my wave count. So if you ask those Elliott wave guru, say, your wave count is wrong. They say, so what? So if they have me making money, well, they will say to you, so what? Doesn't matter. But in order to forecast the market, you want to count your weight accurately. Otherwise, you may forecast the market wrongly unless you stick to the market pattern alone. Okay? So third area wave is the shortest. So we want to compare how far the price went up. I've done my homework. I'll show you here. It's $40 move. So you see, look on your right hand side this time. You can see where I'm placing my line. I'm clicking on this, $35. Can you see $35? This session, look here. When I'm clicking on my line, you see $35. Yes? Okay. So the third area wave start from the $35. And it went up to which level? $75. Is that $40 move? $40 price move? Yes, it is. All right. Look at the first way. Is it shorter? Sometimes that's what I say to you. When we are talking about should not be the shortest, we are talking about in length and also in magnitude. Sometimes if you look at this, you may see that, oh, the first way is the longest. But if it looks like this, check the price move also. All right. Check the price move. How is it $20 price move? So how far the third area wave went up in dollars? All right, that's what I meant. So it went up in $40 price move here. So now I want to compare it to the first wave here because the first wave looks a little bit longer here if you look at the length. So this is the length. We are talking about dollars. We are talking about the magnitude. So now we're going to see beginning of the first wave. You see here, $20 in the zone of $20. Let's see the top of the first wave, $44. So $24 price move during the first area wave, $40 move in the third area wave. The third area wave is not shorter. Remember what I said to you, when we are saying shorter, we are talking about in length, either in length or in magnitude, price action, dollars, okay? Pounds, sterling pound, British pound, or yen, all right? How it went up, okay, in price, okay? Followed by, okay, so the third area wave is longer than the first wave, so it's not the shortest multi-wave, but the fifth wave is longer. It has been extended. This is normal. So what you should know is this: if the third area wave is not extended and the fourth wave is quite shallow, there is a high chance that the fifth wave will be extended. But the fifth wave will not be extended if the fundamentals are weak. So sometimes you may see that, okay, the third area wave is not extended, the fourth wave is shallow, or the fourth wave is prolonged, and trader will say, okay, market analysts, okay, area wave gurus will say that this stock will be extended during the fifth wave. But if the fundamentals are weak, who cares? Investor will not be excited to push it up. So though the area wave theory will forecast that the fifth wave will be extended, we may not see an extension, wave extension, because the fundamentals are not supporting, okay, the technical analysis. So my wave count is making a little bit more sense to me because when I look on my left hand side, I use different time frame. I keep my eyes on the price. I am able now to filter out the area wave analysis mistake. So I have first wave, second wave, third wave, fourth wave, and the fifth wave that has been extended. In fact, I need to point something out for trading. This fifth wave, it looks more like a triangle for me, ending diagonal. Okay, here it is. It looks like an ending diagonal because of the reaction of the price. See how the price, it dropped down fast. Gap here also fast. But that's another story. So after 1, 2, 3, 4, 5 waves, so our multi-wave, okay, hold on please. So who do I care about? Okay, so I keep posting video on YouTube. Different type of traders are watching it. Okay, for some traders, today it doesn't make any sense. They say, George, I do not care about your blah, blah, blah. I am subscribed, which is good because if you are subscribed, it means that you are not interested in this subject, which make me less problem for us because we don't have to worry too much about you, which is good. But some traders, it may not make sense to them today. All right, they may unsubscribe. I see it sometimes. They unsubscribe, especially on our website. They unsubscribe. They come back again. They subscribe again, which means something has clicked. They say, "Well, what? Okay, this guy was talking about before. It makes sense to me now. Then it did not make sense, which is okay. It's going on all the time. So somebody says something, you think that what a crazy person. This is a stupid man." But then a few years down the line, or somebody say to you, okay, if you're going to marry a woman, do not look only at the physical aspect of that lady. Now, if you are 15 years old or 16 years old, you say that is stupid. All right, I want my woman to be gorgeous or something like this, okay? But then a few years down the line, you have met a lot of beautiful ladies with shitty characters. Now, what they have told you in the past, now it starts making sense to you that it's not all about the beauty, but it's about the beauty plus the character. Okay, all right? Now, it makes sense, all right? I'm just talking now, okay, because it's beautiful weather in London today. Okay, so now we see 1, 2, 3, 4, 5. So if what we are saying now doesn't make any sense, okay, don't be wild about it. Say, it doesn't make any sense to me, Joe, blah, blah, blah. Okay, move on. Maybe it will make sense to you later, all right? Now we have 1, 2, 3 down. This is now a double retracement. So what we were calling before the fourth Elliott wave is the first retracement. What we were calling the fifth Elliott wave on the monthly chart is the second retracement here. All right? So at this point in time, we have count 1, 2, 3, 4, 5 waves, followed by a double retracement. At this point in time, trader will be thinking of a flat correction that will bring the price down in 5 moves. Look what has happened here. The price went down, sharp, boom, down. We are on a weekly chart now, okay? It went down in 1 move, and then went back again up here, okay? I'm not going to go into, okay, this flat correction now. I will be recording another video, all right, when we will be talking about how to identify a complex, a flat correction, a pattern like a genus. For the purpose of this recording, which is about how to avoid Elliott wave analysis mistakes, I'm going to go back to the monthly chart, trying to wrap it up now, all right? You can see that this is our new wave count. I'm going to remove this line from the pink line. That's where we start counting wave. But on the monthly chart, when we began our wave count, we start drawing our first wave from here. So we managed to avoid, okay, Elliott wave analysis mistakes by going to the weekly chart and see what has happened. All right. So on the weekly chart, we look on our left-hand side. We keep our eyes on the price. And we thought that, okay, it makes more sense that this should be the first wave. But if you did count your wave on the monthly chart like this, you may have thought that this is only the first wave from here instead of from here. So now on the monthly chart, this is it. It's clear now. First wave, second wave. Before we were thinking that this is the third wave, but now it's not. The third wave has ended here, followed by a very shallow fourth wave here. Okay, I'm using too much orange today. I'll use green now. And the fifth wave, which has been extended in turquoise. So first wave, second wave, third wave, fourth wave, and the fifth wave. Now we have a double retracement here. I will be talking about what's going on now in this session here in another video. So to avoid that this video is too long. So to summarize this video, okay? First step to avoid Elliott wave analysis mistake, use multiple time frames. So now we drop to the weekly chart. Quickly, we see that things did not make any sense. Our third Elliott wave has been subdivided in 3 ways. We start digging into it, keeping our eyes on the price, looking into the past, and things become clear out to us. So first thing first, do not use, okay, a single time frame. Whenever you are on any time frame counting wave, look on your left hand side. Check what has happened in the past, always. All right? So if I go to the yearly chart, I will look on my left hand side for my reference point. What has happened in the past can also help us to avoid Elliott wave analysis mistakes. Next thing, we want to stay focused on the price action alone, the price structure. All right? The shape of the price, how the price did move. All right? This is very, so here, when we were calling the fourth wave and the fifth wave, when we go to the weekly chart, we look at the price. Keep eyes on the price without blinking. This is what I mean. What has happened? It went down, it went up, it went down. It went down, it went up, it went down, it went up. It's a double retracement here. Clear double retracement. Okay? So, but on the, when we were on the monthly, we now on the monthly chart, but we saw this on the weekly chart. When we moved to the weekly chart, we saw that this moved down and up. It's not the fourth and the fifth wave. It makes sense? All right. Let's stop here. So if you have any question or suggestion, okay, put it in the comment section, and in due course, I will record another video to answer your specific question. We welcome all your questions because these allow those questions will allow us to record more videos in the future to clarify the subject of the Elliott wave principle. This tutorial is about how to avoid Elliott wave analysis mistakes. We are the TSTW24 traders talking about how to avoid Elliott wave analysis mistakes like a pro. Happy trading to you all, and speak to you soon.